all very welcome to Practice News here on the 2nd of September. There's a real back to school feel about the beginning of September when we're all sort of holidays are over. Hope you had a good summer. Hope you got away. Hope you managed to get onto an aeroplane. And we're back now and just thinking now about the next few months into the end of the year. So back with Practice News, a packed show today. We're doing it a bit differently today. Jeremy, you're actually in our Belfast office this morning.
I am indeed, Conal. Delighted to be here, as I mentioned earlier, here in a room I'm sure that's familiar to many of you who are based in Ulster, in the Members' Lounge. As I said, a lot of history behind me here on the wall. All the former chair people going back well over 100 years, the Belfast Society, the Ulster Society, and also, of course, the young accountants here in Ulster as well. No, it's something different. As I said earlier, we're for the last 6 months or so now, thankfully since the end of COVID, out and about a good deal, both visiting practices, and I often on a regular basis work here from the Belfast office as well as the Dublin office, and it's great to actually be able to meet with members or even visit practices out in the city or a bit further afield. So yeah, we said we'd do something different and get away from behind the desk in Dublin for the normal webinar. So delighted to be here. I'd like to thank the Ulster Society team here, Zara and Bernadette and all the team for all their help.
Absolutely, and that's great. It's great to get out and to get travelling and to be able to broadcast from there. It's not as obvious, but I'm actually broadcasting here from the Dublin office. So it's once again, it's just good to do it a bit differently. Now, look, without further ado, we'll get started. There's a lot to get through in today's Practice News. So we've got just looking at all the stuff that we're trying to cover. I want to talk to you about FRS 102. I know Jeremy's going to run through an expanded resource that we have here, our tech hub. We've added a lot of FRS 102 questions and answers. So this could be a great point of first reference for people when they have questions around FRS 102. That's great. Another great resource that we have is an anti-money laundering red flags document. Okay, which we put up there, and Jeremy's going to give you a link to it as part of what he's doing. What I love about this one, this document, is first of all, it takes practical scenarios that you could well encounter in areas where you might think about reporting. But on top of that, it goes through all the various different types of reports. Unfortunately, especially in ROI, and it's an ROI document, that there's a plethora of reports that you may have to make in certain circumstances. So this considers each of those in those circumstances. So it's I think it's very helpful and practical. There's that. Audit, it's a to-do list now. I know Jeremy's going to be talking to you about it. Aidan's going to be talking some more in due course about it. Being first and foremost, you've got to consider ISQM. You have to have something in place for this new quality standard by the end of the year. You've also got to be really thinking seriously about the new CPD format if you are an audit RI. I know once again, I'm going to tell you a little bit more about that as we go through it. We are going to be talking to you also about tax. Garode has got a full and very, very useful update to go through there. The biggest challenge, of course, for any accountancy practice now is getting and retaining and rewarding and developing staff. All about staff. That's the pinch point now. So we are going to be talking about that and giving you some tips. We've got some guests we're going to introduce now in a minute to help us to do that, to tell their stories. And finally, there is a deadline coming up for our incentive. If you are going to apply to get that incentive, if you're going to train staff, certainly don't ignore that incentive that chartered accountants give for people who are increasing the number of staff whom they train. So that's the deadline for that is fast approaching. So that's that. Who we're going to be talking to this morning, this is our team. We'd like to have Aidan Lamb, our Director of Professional Standards. We're directed to have Garode, our tax lead. Myself and Jeremy, of course, already introduced ourselves from Practice Consulting. So all here to help you, but we're delighted also to have our outside guests, our members, to help us this morning. Catherine Martin from Cavan & Kelly. Catherine has been with Cavan & Kelly since 2005. Cavan & Kelly has got offices in Dungannon, Omagh, Enniskillen and Belfast. So their main centre is outside of Belfast, and Catherine looks after audit, accounting, client service. I think is the best way to put that, Catherine. So we're delighted to have you this morning. Catherine's actually here next door to me. She was down at the Irish Accountancy Awards last night, as was Conor. Both firms were finalists in those. So congratulations on that. So that's Catherine. We're also delighted to have Conor Woods. Conor back to talk to us. I know Conor, you've been on Practice News before. So once again, it's great to have you, Conor. There are similarities between your practice and Cavan and Kelly. You're both mid-sized practices with a centre outside of Dublin. So it's you would have unique opportunities and challenges around that. So it's great to have you along and to talk to you about that. So we'll talk a little bit more about your practices and your stories later on. So looking forward to that. As always with these webinars, because it's a webinar, it's not in person, we like to just give people some sort of notion about the demographics of who you are, who people are. So this is you, mainly FCAs, mainly 10 years qualified. We've got a good spread. You can see there our heat map, if you like, of the island of Ireland. You can see the people from all over the island. Delighted to have you. And good split, male and female. The demographic, the median age is a sprightly 46. So this is all good. We're appealing to the younger members, which is great. Younger than me anyway, which is great. So to disclaim what we have to say. Look, don't forget, guys, this is Practice News. It's not a legal document. It's just us raising your awareness of these issues. So everything that's said here is a summary of the situation. So please, as always, go back to the source documentations. There you go. That's what we're all about here. So now, moving swiftly along, I'm going to hand you over to Jeremy, who's going to give you updates. I'm going to move the slides. Jeremy's going to give you the updates.
Indeed. Thanks, Conal, for those introductions. Just to say to you, if you joined a little bit late, Chris has actually shared our slides again in our chat Q&A function. We would have sent out the slides yesterday afternoon. Again, they're invaluable to have with all the links I'll be referring to here if we're doing a little bit more homework afterwards with relation to some of the guidance and documentation and so on as well. So please download those and have them there. And of course, we welcome to make it as interactive as possible, your chat and Q&A as we go along. Always very, very popular. So don't be shy. Share us your questions and we'll try to answer. No guarantees that we'll be able to, but we'll try. So Conal, thanks very much for that. As usual, I'm going to share with you some news and technical updates. And as you mentioned in the headlines, I'm going to concentrate in 3 areas this morning. Start with financial reporting, FRS 102, and some new guidance, also some AML, and also audit, good old audit. And Conal, you'll be talking to me a little bit about ISQ and so on at the end of that as well. First here is with relation to some very useful guidance, as you mentioned, that our professional accounting team has put together over recent months and just launched a few weeks ago. And this is a part of our actual technical hub. So it's our FRS 102 questions and answers resource. That's just a screenshot I've taken there from the technical hub showing some of this. Conal, if you can click on to the next actual slide here. And many of you, I'm sure, are familiar with our technical hub. It's been in existence now for about the last 2 years or so, replaced the good old chariot. And the technical hub is under the control and development of our professional accounting team. And they do Trojan work, always updating it, and particularly providing updates with relation to the core areas like audit, anti-money laundering, financial reporting, and insolvency. Just yesterday, actually, my colleague Lillian Hampen, who was on our last show in June, she added a very useful document showing the updates to the Companies Act 2014, brought in by 2 new pieces of legislation in SCARP and founding the actual Corporate Enforcement Authority. You probably want to see that on LinkedIn from yesterday, and you'll see it on the hub as well. So quite literally daily updates in this area. And one thing that the team was working on in recent months was actually putting together a range of questions and answers that we frequently over the years have got into the Institute from members with relation to FRS 102. And it is Mike O'Halloran and his colleagues in the team have been putting this together for recent months, and they have structured it in a way that it covers about 80 different questions and answers, and it's by section in FRS 102. So it covers key areas such as impairments, such as government grants, borrowing, changes in accounting policies, how you would adjust for a prior period error, inventories, investment properties, post-balance sheet events, and so on. All I can say to you, look, is to actually click at the link there on the slides on the PDF version, and it'll carry you to this resource here. Go through it in your own time. It's very, very useful, very intuitive, easy to read, easy to follow. And I guarantee you it'll answer some questions for you or provide clarity. Again, of course, every circumstances you do have to adjust for and apply company law and apply your own things, but it's a very useful guide to have, and it's free as well. So please do make use of it if you can. And as I say, a call out to Mike and the team for putting together this very useful resource. I know a lot of time went into it. And I think Mike will be joining us as well in a coming practice news webinar to talk more about his work and some other things that he's got in the pipeline as well. So looking forward to that. Caudal, if you can click ahead to the next one, and this is on AML. And we have some guidance, and you mentioned, Caudal, the AML red flags training material. As I mentioned, our professional accounting colleague Lillian Halpin joined us on the June webinar talking about all things AML and sanctions related. And she would have mentioned the original copy of this AML guidance that was issued back in May. This is a big piece of work, again, put together by what's called the Joint Practices Group in the Republic of Ireland, among Garda Síochána and our fellow Irish accountancy bodies. And the whole idea here is to put together 8 case studies that highlight the red flags, and these are issues that any practitioner may see. It may be with relation to poor accounting records, it could be in relation to different clients and industries that are susceptible, or maybe question marks around purchase of investment property by a client or new investment by a client. Again, the whole guidance here goes through a scenario, talks through what the red flags are that an accountant should identify in their AML assessments and work, and then further investigations they should do, and again leading to should or should not there be a report. And of course it's a very complex area in the Republic of Ireland, the different criminal and reporting and aspects and so on as well. Now, coming back to it, we actually got some feedback during the summer months on this document. And as I mentioned, it is a very complex area with the actual criminal legislation and reporting. So there's been some updates put out, and there's been a second version. Most of the main points are still the same. So it's the same as case studies and everything like this, just clarifying some of the reporting requirements with relation to criminal justice acts in the Republic of Ireland, and also some updates as well with, of course, the Corporate Enforcement Authority coming into being in July time. That's, as I say, is part of just one part of our dedicated AML resources. It's part of our technical hub. And if you click on that link there, you'll get to it. It's constantly being updated. And guys, I would say to you as well, there's also the sanctions. We won't get into details today on that. That's constantly being updated as well, both for the UK, Ireland, EU as well. So please do check it out if you have any questions. The next thing, Caudal, here is some CCAB client due diligence guidance, quite similar in some ways to the actual red flags documentation. The CCAB, if you're not familiar with it, is actually the UK body of joint body of accountancy bodies, of course, which Chartered Accountants Ireland is part of as well. Back in July, they published these 4 client due diligence case studies. And as you can see, they focus in on, and if you click the link there, you get all of them. They focus in 3 or 4 pages each about high-risk countries, high-risk clients, and very similar to the red flags with relation to the Irish document I mentioned. It identifies what are the red flags that an accountant should see here, what should they pick up on, what will be the risks to them in their practice, and what should be their follow-up action. So whether you're in the UK or in Ireland, I would say these 4 documents, very easy to read, do download them, they'll be relevant wherever you are. So again, some very useful guidance for you there, so please do use it. Caudal, if you can click ahead again.
We have a question there, Jeremy. Someone says, what is the position with the AML toolkit? It's been kept up to date. I'm not sure what the question is.
Was launched last year, and it includes for the 5th directive. As changes come along, if there's a 6th directive, as different things come along, of course we'll keep updating it. It's a licensed product and so on. But if there's a more specific question there, we'll be happy to take it.
Yeah, absolutely. Okay. So now,
listen, if you can click ahead again, and I'm on to my final topic here, audit. And this is something that 2 topics we've spoken about previously here on Practice News a couple of occasions. But again, just a reminder, and as I said at the outset, this will be a part of your autumn to-do list. And the first thing here is in relation to alternate arrangements. You will recall actually in our April show, we're joined by Karen Flannery, colleague of Aidan in the Professional Standards Division, to talk about the updated audit regulations. And one of these that's flowed from an IASA requirements is that if you're on the Republic of Ireland Irish Audit Register from April 23, you will be required as a sole practitioner, sole RI who is on the audit register, that you will actually need to have an alternate in place, and that alternate will be that you stipulate the name to the institute. Myself and Aidan are going to talk more about that requirement in our piece at 11 o'clock or so, but it's one to think of if you haven't already put that in place, to be thinking about who you could talk to and potentially work on this regard. The next one here again, and it's coming from another IASA requirement, it's been around a little bit longer here, is specific audit CPD requirements, if you're on the Irish Audit Register. And this is to ensure that you're actually doing particular training with relation to Irish auditing, financial reporting, and also Irish company law. And this, remember, applies if you're on the Irish Audit Register. So if you're in Northern Ireland or the UK and you're on the Audit Register, this applies to you. Or if you have no current Irish audit clients, this still applies to you. Now, we've been talking about this for a while, and it's been in place since January 22, where you actually need to be mapping out your training from 8 months ago now for the year. And overall, we've put out some more guidance here, including some very useful guidance by our professional standards colleague, Cathy O'Hanlon. She's done a very good presentation, and you can get the recording of it there. But we also, in recent weeks, and we're going to finalise this soon, Conal, I understand that we've been putting together a bundle of courses to highlight for you, and also how you can record your actual training as well to meet this standard. And Conal, I think you have a next slide or something that you can tell our members about this. And are you going to tell us about ISQMS maybe first? But we'll get to that in a minute. Yeah.
Yeah. Well, look, I mean, we are going to do that. I think we're going to ask you in one of the slides to click a link if you're interested in the support package that we're putting together for this. Essentially, look, first of all, in the new year, you're going to have to sign a declaration. If you're an auditor, you're going to sign a declaration. They're going to be coming out to you that you've actually complied with this. And then if you get a monitoring visit, it'll be part of the monitoring visit that your compliance, the backup to that declaration is going to be reviewed. So it is, I know Cathy was asking me not to use the term the output method. It's somewhat like the output method, but it is it's more structured, if you like, even than the output method of CPD. So what you need to do is to look at the link that Cathy has put together there on that. If you're interested in the support pack that we're putting together, essentially, if you're looking to do your CPD for the year more or less starting now, the key courses which ought to, if you are an auditor of SME companies using FRS 102, if that's what you do, these are the courses for you. And then what are the learning objectives in those courses and what are the competencies hit? We will identify those and put them into the document already for you, just to help you along with it, insofar as we can do that. So if you're interested, send us an email following the link, which we have if it's not in this presentation, we're going to send it out to you immediately after the presentation. That's where
I think should be in the PDF slides that we sent in. Yeah. And I think it's in this presentation as well, but might be a culprit if it isn't, but it's definitely in the PDF pack that was sent out to you yesterday evening. Yeah,
listen, well, exactly. Have a look in the PDF pack, click the link and tell us if you're interested. And obviously no commitment on your behalf, then we'll just send you a link to book the courses if you want. Then so it's a choice as to whether you want to book the course after it, or which one, or the bundle, or whatever else, and to get the support document which has got a certain amount of information pre-completed if you do those courses. I think it's quite helpful. All right, so the ISQM. Okay, by the end of the year, every audit firm in ROI or who has ROI registration will need to have ISQM procedures in place, which is a replacement for ISQC1, but it's more than that. The essential part of ISQC1 was that there was an element of sameness between the various ISQC1 procedures for firms, whereas ISQM is really not going to be like that. ISQM is going to be much more reflective of your firm. And the best way that I can describe this, and maybe Aidan maybe want to comment on this later on, is that if you've had a monitoring visit, the opening meeting where the inspector endeavours to see, well, what are the risks in your firm and how are you dealing with those? That's the process which you have to go through to identify first of all, to have quality objectives, which is to be properly resourced, to be properly led, to do proper audits, to properly document them, etc., etc. So those are your quality objectives. But then what are the risks? And this is the key part. What are the risks in our firm which prevent us or which challenge the achievement of those quality objectives? So risks might be, for example, we only have one auditor who doesn't have an opportunity to engage with anybody else in the firm. That's one risk, perhaps. Another risk is we have two partners, two RIs, And the risk there, of course, is they're both not doing the same sort of audits. So they need to be communicating and have a governance structure to make sure that they are, in fact, basic enough. There's only two of you, but still only need to do it. That is what you need to have in place, and you need to think about that one and make sure that you don't have two entirely separate audit regimes going on in your firm. So those are the sort of things that you're going to have to be concentrating on with ISQM. Again, this is an area we're going to concentrate a lot more on. As you can see, there's some resources there you can click on. We're going to be doing a webinar on the 5th of October. I'd strongly advise you to attend that. And look, and also for all the PQA license holders, we're going to be giving you an ISQM pack, which you can use. There's a bit of work on it now, so we're getting that out to you as soon as possible, so you can be looking first. And where I strongly recommend people think first, zone in on first, is this risk review that you've got to do. So and indeed, if you want help, if you actually want us to visit you either virtually or physically to help you with this, by all means, we'll endeavour to do as many of those as we can. I don't know how, as always, resources are limited. We'll do what we can for people, but if you phone us, the sooner the better, I'd say, on that one. So that's ISQM, and then there we go. Sorry, that's the pack there. So if you click there and say it's just to express interest, that's all, and we will destroy the emails after that, so you don't get any more emails from us. We'll comply with GDPR, of course, on that. So that's that, and then. Look, the other thing that we just want to draw your attention to in relation to COSEC in the Republic of Ireland, once again, is the Companies Corporate Enforcement Authority Act. One of the Section 35 of that Act is asking, in certain circumstances, that directors will have to provide PPS numbers when incorporating a company, when they're being appointed as a director, or when they're filing an annual return. So all those standard forms, all the ones you're used to, when you're doing those, you have to supply the PPS number with that. The section needs to be commenced, and that's going to, we believe, is going to happen early 2023. So it's coming at us fairly sharply. But look, just be careful. Just because you have a PPS number in file doesn't mean you can put that out into the public domain because of GDPR. So you need to get the permission and ensure you have the permission of clients so you can actually use the PPS numbers you have on file for that. So that's something that you need to be thinking about doing. Exactly how that's going to work, and indeed what you do with people who don't have PPS numbers, such as foreign directors, needs to be finessed between now and the beginning of next year. So watch this space. We're going to be giving you guidance on that, and the CRO is going to be coming out also and giving you guidance on that. So we're going to just watch out for e-news and the various updates, and practice news, of course, and practice matters. We're going to keep you updated on that. So that is the news in relation to that. So Jeremy, back to yourself and go.
Thanks, Conal. A lot of homework for you guys there, especially on the audit side. But I'd say myself and Aidan will have more of a detailed chat about all those things, about the alternate, the CPD, and the ISQM. Listen, I'm delighted today. Firstly, I'm actually going to say that some of you might know that our colleague Crona, let's just say she's otherwise occupied at the moment. She's had a new revival in the household in recent months, so I'd like to congratulate Crona and her husband and wish her all the best in the coming months. She'll be back with us in the new year. But I'm delighted in the meantime that for the coming webinars to be joined by our tax colleague, tax manager, Gerard O'Sullivan. Gerard, firstly, you're very welcome here for your first time here on Practice News. I know you're joining us this morning. We're right across the island. You're joining us near Cork City this morning, Gerard. Hopefully all is good down there.
That's right. Thanks very much, Jeremy. Yeah, signing in from Cork here, and I can confirm it's nice and sunny. So I'm sure the same is down in Kerry for your own family as well. So
I have already confirmed that this morning. Well, unfortunately in Belfast, not so. Listen, Gerard, it's I know coming into a very, very busy time for Republic of Ireland tax practitioners, corporation tax this month. Then we're coming up actually to obviously personal taxes in October, and we even got the budget brought forward a little bit as well too. I think the 27th of September. I'm going to hand the floor over to you. You've a lot of updates for our members this morning.
Yeah, thanks, Jeremy. So look, in the slides there, I think next slide, please. We've got just a kind of summary of the key points we're going to cover today. So just trying to focus on some of the key things which will be impacting members as we come into tax filing period. And look, as Jeremy mentioned, with the budget coming, the next webinar we will have a significant update there as things get released. But I suppose just to start off, I know it was mentioned at the last Practice News, but we since actually published our pre-budget submission 2023, and we write that under the auspices of the CCABI. And look, some of the key points that we did cover there, which be particularly relevant to us all at the moment. We certain measures to accelerate the supply of affordable housing. We have stated that employers, PRSI, should not see what comes of that in the coming weeks. Again, we've tried to mention something around capital tax rates, and the measure we've proposed, and I think it's shared across various bodies, is to reduce capital tax rates. We've put out the number 20% again to bring it back down there. Again, time will tell, but we'll keep banging that drum going forward, because capital tax reform, obviously, look, it's important. On the gift tax, we've mentioned raising the gift tax thresholds. Obviously, in line with inflation, it's important that the gift tax thresholds reflect the rising prices across the market. And very important at the moment is we've mentioned quite a bit around landlords, and to bring parity of treatment as much as possible between corporate and individual landlords. So look, it's well covered in the media at this stage, so we won't go into too much on the Friday morning, but housing obviously is a critical part, as well as the rental market as well really needs to be looked at. Some measures, even temporary or whatever, to try and improve the scenario as it currently stands. But helpfully, the pre-budget submission was picked up by the Times, the Examiner, and the Independent, as well as various local news outlets as well. And Crona and Brian would have spoken on Radio 1 and News Talk in various places as well. So, it's great that our pre-budget submission is seen as an important document, and media do look to us and our suggestions, and it's useful that they echo a lot of what we're saying and what we're proposing, in particular in the area of personal tax reform and rental. So there are two areas in particular which the media have picked up on. So just wanted to mention that at the outset, as in, it's just because there has a lot of work been put into the pre-budget submission, and we've got a lot of input from members on it. So that really helps the quality of the document that we're able to produce. So again, just a word of gratitude to all the members that do input into that on the various committees. Now, the big one I've been told that it comes up again for practice news is around my inquiries. And look, we've spoken an awful lot, certainly since coming on board in the Institute. My inquiries have come up time and again, so we're well aware of the frustrations that members are encountering in the My Inquiry service. We've made various representations at Talc Collections, Talc My Inquiries itself, and we've also had a meeting directly between ourselves under the CCABI and Revenue over the summer, and it was a constructive meeting. Revenue were able to accept that there are some scenarios where the delays in response times need significant improvement, and I suppose their Revenue have, from there, they've told us that they've made a lot of effort to try and improve the service as much as possible. But one solution, I suppose, to issues that members are encountering is the exceptional contacts facility. So we've mentioned this in tax news regularly, and we'll continue to do so. And from initial feedback now from members that have gone down the exceptional contacts route, they've realized a swift turnaround in queries that might have been ongoing. So I suppose if you take nothing else away from today, it's to really use that exceptional contacts facility, to know it's there, and when appropriate to use it. Sooner the better. Even, we've heard turnaround times of 24 hours in certain instances, direct feedback from members even this week. So we are conscious that the exceptional contacts facility could become a bit like the fast track in Dublin Airport. So look, we're conscious that dynamic is potentially there, but look, Revenue have told us again and again to share this option with members. And My Inquiry service levels, I suppose, as I mentioned, we're all aware that at times it could be improved. But as I say, if you have got to the scenario where you've gone beyond the 20 days response period, which Revenue set out to achieve, go to the exceptional contacts facility. It will, it should, and from the feedback, I'd expect it will give you the resolution you're looking for, and a swift resolution, which is key, especially now as we come up to filing deadline. You're going to have obviously all your different clients coming in all at once now with their boxes and their folders with all different stuff. So, time will be of the essence. So really, if you are encountering significant frustration, go down that exceptional contacts route, because we are seeing good responses when you use that facility. And look, as I say, for now, it's still very much exceptional. So you should be able to get the result you need. So revenue will also be, they've agreed to write an article for us on TaxPoint in the coming months. So keep an eye on that. Any TaxPoint subscribers and any new would-be TaxPoint subscribers, certainly it's a good place to check out for, a lot of taxes, particularly we will have revenue writing in the coming months. So next here, just a reminder again on the non-resident landlords and revenues stance on that. In recent months, I know last year there was a workaround, and this year we have been lobbying hard for a similar workaround for 2021 returns. Now, Revenue's view is that this is old legislation and that they're not enforcing any new rules. They are simply saying that if you're a non-resident landlord and you haven't appointed a collection agent, then Revenue are expecting your tenant to withhold a tax. We all know that the frustration this is causing, and we're certainly well aware of it. Members have mentioned it again and again, but we're expecting a workaround to issue in the coming days. Now, I was told it was meant to issue today, but I had a quick look on the e-brief section of Revenue's website, and I haven't seen it today. So it is expected, and as I say, we have lobbied hard for this at tax collections, and we've communicated to Revenue again and again that, look, this is just the whole withholding tax legislation itself just is unnecessary, in particular when you have non-resident landlords looking to pay tax, and the facility that Revenue now require to include withholding tax details and the lack of a workaround, it's just preventing would-be taxpayers from paying their tax. So we are expecting a workaround, and we do know that it is frustrating that a workaround hasn't been available to date. Just to mention on that Revenue are open to looking at this on a case-by-case basis, which again isn't efficient from our practitioner's point of view. But if you have had returns, Revenue have informed us that if you go via my inquiries, they are again open to processing returns, but again, this isn't efficient, so the workaround is expected shortly. So just moving on out to PSWT, again, this is another issue where we've been having ongoing discussions with Revenue, and Corona would have covered it at last practice news as well. So since then, we have made a submission via Talc Collections itself. We'd various representations there, but we did make a submission to RLS on a potential solution to the GMS contract issue. So with the withholding tax issues there and the allocation of credits. Now, Revenue's view remains that the GMS contract is between the HSE and the treating doctor rather than the practice. So that is limiting Revenue's options to, I suppose, make some sort of change to things. But again, we are expecting some work around here. Revenue are looking at it. They have said that this is different to the scenario which happened historically around veterinary practices. I believe with the Department of Agriculture a couple of years ago, there was a similar type of arrangement where there was contracts between the department and the vets. But in this particular scenario, again, Revenue said it's a different scenario because the contract between the GMS contract is by all accounts a stricter, narrower contract. So again, it is limiting what they can do. Now, we spoke about it at Technical as well around potential options here. As I say, Revenue are looking at it, but the recent tax determination has complicated matters. So look, Revenue are looking at this again, and they are saying it's a slightly different scenario. So we're continuing to make representations here, and the other representative bodies are lobbying hard as well for a solution that acknowledges the reality of the situation. Accepting the contractual situation is one thing, but look, there is a practical reality here. And the last thing that anyone wants is for doctors to forego GMS contracts because it doesn't work. So again, look, we're continuing to try and find a solution there, but it's taken time. Appreciate this has been around since last year, so as I say, we're continuing to work on that. The next piece, which I just want to mention, is around the removal of TDMs while under review. So again, this is another point where we've been having ongoing discussions with revenue. Now, in particular, we understand in the area of capital gains tax, the removal, there's often significant numbers of TDMs unavailable, and some of these TDMs have been unavailable for in excess of 6 months. So I suppose the first thing to note is that revenue have commenced a review of the overall process, and that has been ongoing for some time, and that review is expected to be completed by December. So we're not going to expect any change between now and December, but potentially we will raise the matter, the urgency of the matter, if there isn't much movement at the next health meeting. So again, we are continuing to try and find a solution here to benefit members and practitioners. So there seems to be some leeway from revenue. Revenue have acknowledged that, look, perhaps they could leave up TDMs with a draft watermark and with the necessary caveats to say, look, particular sections are under review. But obviously, look, when a TDM is under review, still a significant portion of that TDM is going to be relevant. So we'll see what revenue come back with, but we have been pushing hard to keep these TDMs up. Now, I know that's not much of an update right now as they remain unavailable, but we're aware this is a critical issue for practitioners because we all rely on these TDMs. They do contain vital information. So as I say, this is something high up on the agenda for us at the moment. Look, next, just a quick technical update on Section 604A and its interaction with gifts received by way of inheritance, or assets received by way of gift or inheritance. So 604A is the 7-year CGT exemption, which came in to try and stimulate a bit of activity in the market at a time when there wasn't much a couple of years ago. So, the section requires consideration of at least 75% in order for 604A to be available, and the question was raised whether deemed consideration would be considered consideration for the purposes of 604A. Revenue said, look, the law to them is pretty clear that deemed consideration is not sufficient. So if you receive an asset by way of gift or inheritance, the 7-year CGT exemption won't apply unless you've actually paid money or money's worth, or that there has been some exchange there. And again, that's 75% of the overall value of the asset. So that is something that various practitioners raised via the different committees, the tax committee south in particular. And as I said, look, we did raise it. Revenue are going to update the guidance to make that very clear. But their view was that the legislation it has been drafted relatively clear, such that they didn't necessarily feel that there was ambiguity. But again, I understand this has been going around. So just to be clear, that consideration does not include deemed consideration for the interaction of those two sections. Just coming down now on the list, a quick note on RAS Offline. So we're aware that there's an issue with RAS Offline and the filing of Form CT1s via RAS Offline, and that facility hasn't been working. We're aware that members have had to manually input data onto RAS Online when that has already been completed on RAS Offline, and that's obviously very inefficient for everyone involved. So Revenue have told us that a fix is being put through tomorrow. So that should be active then from Monday onwards. So bear with Revenue in the sense that IT upgrades, as we all know from our own work, can sometimes just drag on a bit, but we are expecting that to be live once it's completed tomorrow. Just a quick note then on PPAs and the debt warehousing. So just might denote here just that for the majority of businesses in the debt warehousing scheme, period 2 will end on the 31st of December. Revenue intends to contact taxpayers in October, requesting that they make arrangements to repay the warehouse debt. So Revenue want taxpayers to be aware that they must engage with Revenue before period 2 ends to outline their plans to pay warehouse debt. And then should a phased payment arrangement, your PPA, be required, it must be applied for through the normal channels with caseworker approval. It's also possible to pay off the debt in advance of period 2 at the applicable 0% interest rate. And look, Revenue wanted to reassure practitioners given that there may be some trepidation that taxpayers may not be able to meet the repayment schedule, that Revenue's approach will be flexible and pragmatic to take account of the financial circumstances of the various businesses. So in terms of PPAs, Revenue did confirm that warehouse and non-warehouse debt can be consolidated within the same PPA. And Revenue confirmed that the requirement to pay down 25 or 40% of the debt did apply to the warehouse debt also. But again, Revenue would take a pragmatic approach depending on the circumstances of each case. So that's just a quick update there on PPA. And lastly, just a bit there on the bank details. So again, just to remind practitioners, to remind your clients, and indeed yourselves, if any of you are have been banking with KBC or Ulster Bank, just to remind your clients, and again, to update their bank details as soon as possible for the change of bank. And lastly, just letters have issued regarding share schemes. So we would have shared this in tax news earlier in the summer that Revenue intend carrying out a bulk rate review of employees who've been part of share schemes just to ensure that the proper tax is paid. So Revenue have identified this as an area where potentially there is some low-hanging fruit, some underpaid taxes. So if you do have clients, if you've been involved in share schemes, if you have clients that that regularly operate share schemes, I suppose this is something to make sure they're aware that the letters have issued, because perhaps it could have, fallen in a stack of papers, and just to act promptly on foot of all those letters. And indeed, if clients are operating share schemes and they haven't been contacted, no harm to be proactive in that and just ensure that the appropriate form's been filed, the tax is paid, and that everyone's fully compliant, because Revenue are looking at this issue at the moment. So that's a quick update on some of the highlights from the last few months. Again, look, there's been a lot going on in terms of other consultations, in terms of we're looking at Pillar 2, some international tax things. There's a lot of work going on at accountancy or level, again, where we're lobbying around tax issues also. So there's an awful lot going on within the tax department at the moment, but this is some of the highlights that I just thought would be most relevant for everyone here today. So thanks, Jeremy, back over to you.
Thank you, Garrod. You fitted a lot into your 15 minutes there, a very, very comprehensive update. All I'd say to you is, as ever, there's questions coming in from our audience. I think it's one of the most popular pieces is our tax update of the Whole Practice News show. If you could, I'll leave you take a look at some of those questions in the chat function. Some you might be able to answer, some maybe not. And in about maybe 11:30 or so, just before we finish up the show, I'll be back to you. You might have some other thoughts or different things coming from the questions. But thank you very, very much for that very, very comprehensive update. And I bet you're delighted to have your first Practice News piece behind you. So well done. Listen, before we go to our next piece with Conal, Catherine and Connor, we are just actually going to have a short video from our sponsors, AccuVest. And I know, Chris, you're just going to play this. Damien from AccuVest has just a quick update. So Chris, if you're good to go, can you share that with us?
Good morning. I'm delighted to be here again to give you a brief snapshot of AccuVest's view of investment markets, in the hope that it can help you in your discussions with your clients. Now, since we last spoke in June, we've seen a strong rally in equity markets and a fall off in bond yields, despite the economic outlook continuing to get worse in that period. We've had inflation, which has continued to climb over that period, and we've had the Fed and the ECB both come out and confirm their intention to get it under control, which market participants are analysing and assessing is likely now to lead to a very strong possibility of a recession coming through in the next 6 to 12 months. After the worst first half of a year for equity and bond markets in over 50 years, we saw a strong rally in markets in July, although this has reversed somewhat over recent weeks. So what's the outlook from here? Well, interest rate hikes are not good for bond investors, and recessions are not good for growth assets like equities. Inflation is the enemy of savers and investors, full stop, unless they can manage to be invested in assets that are going to give them higher positive returns than the rate of inflation. How much of the bad news that we are expecting to come through is priced in? It's very hard to say, but what it is safe to say is that the short term is likely to be difficult and volatile. So what should we do? Well, the first thing to do is to make sure that you have an understanding of the investments that you're holding, whether that be cash, equities, bonds, or alternatives. Make sure you understand that they are the right assets for you, that you have an understanding of how they are likely to perform in good and bad times, and that you are happy with that and that you can cope with that. The last thing you want to be is a forced seller of assets at a time when they have suffered losses. You need to make sure that you're getting good value in terms of the fees and charges that you're paying. They are a definite detractor to your investment returns, and you need to make sure that you're getting good value and that you're happy with it. The key thing at times like this is to make sure that you have a plan, that you know what that plan is, and that you're happy that it's likely to get you to the right place over the long term. This allows you then invest with confidence. When we have falls in markets, they should be considered as opportunities to rebalance to your strategic positions at lower prices. Remember, during volatile times, if you're on a ship that's taking you the right direction, you don't want to jump overboard in the middle of the storm. I hope this has been helpful, but if you do have any questions, please be sure to reach out to me or the other members of my AccuVest team. We would be delighted to help you or your clients. Thank you for your time, and I look forward to speaking to you soon.
Some very useful tips there from Damien. On our slides as well, if you do wish to contact AccuVest, there's all the details of how to contact Damien and the team. And I think Damien will be joining us as well for a longer piece in our October webinar. So really looking forward to that. Conal, I'm going to hand over to you. I know you've a very important topic, and the main topic, I think, for a lot of practices and the main challenge on retention and recruitment of staff to talk to us about.
Absolutely, and I'd say thank you very much to AccuVest for being our sponsors. It's great to have them on board. Now we're going to be joined now by Catherine Martin and Conor Woods. Delighted to have you both. Catherine, you're actually in the room next door to me here in Chartered Accountant's house, but that's not where you're usually based. You're usually based in Northern Ireland. In Kavanagh Kelly is the firm. You've got offices in Dungannon, Omagh, and Enniskillen and Belfast. Which one are you based in, Catherine? Which one are you? Where do you spend most of your time?
Spend most of my time in the Dungannon office, and then about a day a week in Omagh. So it's
Very
nice
good. Very good.
around.
Absolutely. Listen, as I say, it's great to have you. I mean, Kavanagh Kelly. I think, to be fair to say, Kavanagh Kelly are probably best known as a firm of insolvency specialists, but you're much more than that. You have a very strong audit and tax services, and you're involved in general client service, aren't you, Catherine?
I am indeed, yes. So I actually trained in tax in Dublin. So I probably came up to specialise in tax in Dungannon, and then kind of moved into a general accounts and tax and general practitioner role. I suppose whenever you have clients that are of our size, very often they want you to be able to answer all of their questions in a meeting. So you have to have a wee bit of knowledge across a wide range of subjects, I suppose. So I kind of try to have a few answers, and then can go to the teams for the in-depth answers, you know.
Absolutely. And the reason you're here is because Kavanagh Kelly and Woods and Partners were both finalists in the Irish Accountancy Awards held in the Burlington last night. So congratulations on you both on being finalists. Conor, great to have you back. Woods and Partners, based there just beside the Round Tower in Kells, but you've got a number of offices in the general location of that. So listen, it's great to have you on board. I know you Conor, you founded Woods and Partners, and you service a broad range of clients. And I'm thinking of the not-for-profit sector would be a strength of yours, and also the aviation sector, indeed.
Yeah, thanks, Conal, and lovely to be here this morning. Yeah, we're 10 years trading next April, actually. So it's going to be a big milestone for the practice. It was established in 2013. So we're all excited about that. And like Catherine, we're at the awards ceremony last night, although I left a little bit earlier than my team because I knew I was talking this morning. But it was great to actually get out and actually meet fellow practitioners in a lovely hotel like the Burlington and put on the tuxedo. And just, after COVID for the last 2 or 3 years, all of these events are so welcome, and it's great for the team in particular, just to go out and let their hair down. And I think that some of our guys certainly probably were a bit late coming home last night, but I think that's all good.
Very good. It seems to be a great night. Now, just to get on to the topic of the day, anytime that we ever speak to our members or work with our members and talk about people's challenges and opportunities and so forth, the challenge that people just put first all the time now these days, no matter what sort of firm that you're talking to, it's all about staff. Back in the day, it might have been, how do I get a good portfolio of clients? That's moved on. How do I get a good team? It's what's on everybody's minds. And, there are always challenges. There's more now at the moment. Listening to our sponsors, if times are getting worse, are we going to recalibrate that to some extent? Would it be easier to get staff going forward and harder to get clients? It's certainly on our minds, but looking at the present and looking at the imperative, I mean, practice is only as good as its team. It's something that we have to put first at the moment. That said, when I have spoken to both of your firms, you both acknowledged, the challenges of this, but both of you said, we're up for it. This is something which we feel where we've got a strong offering for staff at all levels, and they responded to that, and we're getting and keeping staff as we need them. So if I might ask yourself, Catherine, first of all, what's the secret?
I don't know if there is. Yes, I suppose that the challenge is finding staff and then finding the right staff, so that they're coming into a role that is a good fit for them and a good practice for them. So it's not just about finding anybody, it's about finding the right person that's going to come and enjoy what they do and enjoy the culture. So there has been loads of challenges, and I suppose like we're very similar to Connor in that we're based outside of the city environment. So for us, it's also a challenge in getting people, to come out of Belfast or the bigger cities to come and work with us. So I suppose we have to pitch ourselves at being a practice that provides a range of services outside of accounts and tax. So we have the advisory, as you said, the recovery, legal services. So we can provide people with an experience that will rival what the practices do in Belfast, really. So that's how we're attracted people, to come outside of the city, to get a good breadth of experience in what they're doing, to get a lot of client contact, and really to become part of our team that we're very invested in. So we really have an approach where we try to attract the people in, train them while they're there with a view to then retaining them.
Yeah. And in terms of just getting that first interview from a staff member, where are they coming from?
Recruiters.
Recruiters, very good. Okay.
Yeah, I mean, the recruiters are very, very active at the minute. So, and that's probably a challenge too, because sometimes you invest a lot of time in going through an interview process with candidates, and they maybe haven't really thought about whether they definitely want to move roles. So you've probably found that you've gone through 2 interviews with somebody, offered them a job, and they said, I just got contacted by by somebody about this job. I'm not really sure if I want to leave my job. Yeah. So you probably felt that you've gone through that process for a while. We also have an in-house recruiter, so within our HR team. So we brought somebody in-house to try to understand what we want in a person. and try to fill those roles for us, so that we're driving that rather than waiting for people to come to us. So that's been very successful in what we've done as well.
Absolutely. What would be your headcount now in Cavan Kelly?
We're probably up at about 109 at the minute, with a good kind of 10, 15 planned for the rest of the year. So, and pre-COVID, we were probably at 80. So during that COVID period, we've really recruited quite heavily, which has had its challenges too, you know.
Absolutely. And a full-time recruiter, that is interesting. That is interesting. Yeah. We'll come back to that. Now, I suppose COVID, you've grown through COVID, and as we also come back to that. That's an achievement. But Conor, I think you've also done that, haven't you? Your practice has continued to grow, hasn't it? In the time.
Yeah, it's been like we experienced a lot of growth in the last 3 years, Conal, and very similar to Catherine. We've a regional presence, but we try to market ourselves as a regional firm with a national reach, and we joined a global network last year called Abacus, and that's been really transformational because it has helped us a lot to service clients, but also it's been quite attractive to young graduates coming in because they see the opportunity to potentially work abroad. And similar to Catherine, our model is probably fundamentally based on attracting good talent, providing a really good training program, a very well thought out training program, which gives them good diversity to clients and sectors, not just burying them into a particular sector, but giving them broad reach into a wide ranging type of client, from aviation to construction to not-for-profit and charity, and that's very appealing to young graduates. And then when you build your strong training program, it does become easier to retain talent. And we found that in our audit and our accounting practice that our 3 senior managers have all come up through the ranks. And they all joined the practice in 2013, 14 and 15. And when the trainees come in and they're being interviewed across the table by one of our senior managers or associate directors, and they started in that position 7, 8 years ago, it's a good story because they can potentially see themselves there down the line. So we're trying to tell a really human story behind the recruitment piece. But certainly talent, getting good talent on board is extremely hard. We haven't used recruiters as much in the last couple of years because I found that they have, you can be more, it's difficult to gauge the quality of the people coming in. I find that we've recruited more people recently through word of mouth, whereby staff within the practice have actually perhaps told their colleagues or peers or friends or cousins or aunties or uncles that we can provide a pretty good training and a pretty good place to work. And I think that's the real life story is helping us probably a bit more than it was in the past, because you build your team and then it's easier for the stories to go around that it's a good place to work. But I think you have to offer something different, and if you can actually, I think the quality of the client base is a big attraction, and having like our main focus, our main offices are in Kells and Virginia, but we would have a lot of our work in Dublin. So we can actually service all of this work largely from the regions. So it doesn't really matter where you're sitting. I think COVID was transformational like that because it really helped the industry to go to the next level, and it actually helped firms like us because it becomes easier to service work at a distance almost. So that was, and it's also helped with growth as well. So we've had a lot of growth in the last 2 years, and our numbers are just shy of 35 at the minute, and we expect them to be up by 40 by next summer. So it's and I think the markets will change as well a bit, because I think that young people may find that it might be very attractive to join the big .com companies, but a traditional training and practice, and I think we focus on providing a really good training. It gives a lifelong training, a lifelong experience, and that experience will transcend wherever you go.
Absolutely. And I've been lucky enough to be out to your offices, Conor, and I can vouch for that. That's sort of the positivity that's out there, and the emphasis that you place on training. So I mean, that, like, an awful lot of what we're saying now about attracting staff, you previously may have said and still say about attracting clients, the importance of the story, the importance of the human connection, of the networking, of the referrals. It's desperately important. And I know, Catherine, when we were talking previously to this, you were talking also about that, getting referrals from staff and indeed from alumni, which maybe people aren't necessarily keeping in touch with.
That's the same as Conor. We would do a staff incentive scheme, really, where they get a referral fee, because I suppose you're paying a fee to recruiters, so you might as well circulate that money within. And as Conor says, if somebody can recommend you, then that's the best type of referral that you can get. So we would really encourage our staff, to speak to their family, speak to their connection, and then also to use that alumni network that we have as well. So it's really positive. Whenever somebody contacts you for a reference, whenever they're moving on to another job after they've left you, maybe a couple of steps on, and they're saying to you, probably didn't value the training experience whenever they were there. It was only whenever they left the firm and they were maybe had gone to the .com firms, Conor, whenever they're working with a bigger team of people who've come through a training experience that maybe wasn't as diverse as ours, for the size of the practice. So they got a great experience in that training that they carry through them then through the rest of their life. So they really value that experience. So we would really use that alumni network as well, for staff referrals, and for client referrals as well. It's something that's really, really positive for us.
Absolutely. And I would ask people not to ignore either the institute services there. We've got a recruitment service in the institute. I mean, it's a tight market, but if we can help you, we certainly will. I'd also ask people to don't forget, if you're a training firm, get onto our website. The Chartered Accountants Ireland website, but equally just watch the link. I mean, bear in mind what a student will do. They'll go onto the Chartered Accountants Ireland website, find your firm, click the link, and what needs to come up then is a welcome to your firm. So I would just advise people, anybody who's not on that, it was training. If you're not training, consider training, because it's a route to staff. If you are training, get onto the Institute's website, and if you are on the website, just check that link, that it gets them to somewhere really welcoming, where they say, when they click on your phone, yeah, that's where I want to be. So it's just a tip, because I was looking around there earlier and I was clicking the links and thinking, would I want to train there if I was a student? Again. So look, and in terms of get staff, either trainees or qualified staff, keeping them, that's another challenge, Conor. I mean, just in terms of keeping staff and sort of the long-term plans for staff and support. What are you doing there in that space?
Look, it's always tough, Conal, and no different what Catherine just said there. We find that mapping out the career path for the qualifieds when they come through is key. Like it's very important that they know where their career is going. And we've actually, worked with you, Conan, as well. You've given us great guidance over the years on kind of mapping out career paths for our young people, to kind of see where they are, to give them visibility as to what their career looks like in the next 5 or 10 years. Because sometimes you can fall into a trap whereby you just amble along and you go from year to year and you get a small pay rise or whatever. But if you give people a clear path as to where they're going and set out goals and areas for improvement, areas to develop, and sometimes we get feedback that some of our management team don't want to specialize in certain sectors. They may end up doing a lot of work in one sector, but they may say, do you know what, guys, we'd like to actually work in a different industry, say. So they may not want to spend the next 5-10 years working with the charity sector. They may want to work more with commercial clients, with for-profit clients. So it's about tailoring their next 3 to 5 years, so that you give them a little bit of what they really want. And also recently we've had like one of our senior audit managers opting to do the tax exams, and Catherine has alluded to this. It's given the auditor or the advisor a more rounded experience. And one of our tax guys, actually a tax manager, recently is asked to do further study in the area of trusts and wills. There's a course, CPD course going on that. So we're going to support that, because it's continual professional development. It's the type of person you want on the team that wants to develop their skills. And if we as a firm can support that, let's do it. And I think that's what helps us retain them. And I see as well on your technical update, the next challenge will be to roll out ISQM. So that's going to be an interesting project for the next 2 months for a lot of firms like us, who will be dipping into the institute again to support us. But it'll be another development area for the audit team to up their skills and for us all to learn.
Yeah.
So definitely on the retention piece, the career progression, I think, is very important. And recently, one of our senior auditors wanted to go traveling. He couldn't go traveling during COVID, so he went for 12 weeks traveling to the States. And through the Abacus network, he was able to work for 9 of the 12 weeks, and he actually set up camp in the Abacus office in one of the firms in New York and Chicago. And he worked for nine weeks out of the 12, and it was seamless. And he told the clients, and the clients loved it, because they said, look, this is very progressive, get to do a bit of traveling and work as well, bar the time difference. But I think it's looking to the future for your staff as well as the firm. So it has to be a joint approach. And I think what we've been trying to do is trying to identify what our teams want and be part of that journey with them and help them on that journey. Because if they succeed, we succeed. Because the rising tide will lift all boats.
Absolutely. Well, and Catherine, I mean, do you have a program, a sort of a staff development program there, and what's your experience of that?
Yeah, well, similar to Connor, we have quite a structured program, for the trainees in terms of kind of their regular technical training that they would go through. I suppose what we find at the minute is that the skills that our staff need and that accountants need are maybe a bit different from they were previously. So things like communication and IT are becoming more and more important. And so the training program really needs to follow the technical plus the softer skills and the IT. So that skills matrix and the skills analysis that we would do to identify skills that we need, what we have, and those gaps. And then we try to focus on those gaps, and building the training program around that. But it definitely is, it's all very well recruiting people who are brilliant technically, but if they can't communicate to the client, what they want to hear and try to understand the client's business, then really, given where IT is going, like that role of the technical accountant, will have to change. It's all about communication with the client, really.
It is. I mean, it's the value. We have to move up the value chain as more of the base skills just become automated. So I mean, and that's where constantly need to be moving and encouraging staff to move along and on that journey. And just finally, I know you both mentioned to me about second level and engaging at school. I think school children here, but that's what it is really, getting people young. And I know, Connor, you were saying that there's either schools or university students. You would encourage that, and people came into you on work experience. And likewise, you, Catherine, you were saying that also, that it just helps to be developing that relationship early with staff. Connor, just your experience of that. You certainly ran through a few case studies with me before.
Yeah, look, it's even, we found, Conal, that transition year students, like we get CVs in, and it's amazing how they come in for 2 weeks. They're only kids, but they might pick up something, and they might find out they hate accounting, or they might find out they love it. But it's lovely to get kids in like that into the office, just even for a week or two. And it's amazing how we took in over the years, we took in students from college in during the summer internship program, 3 of them actually came in then and trained with us, and are still with us. And they came in actually during Halloween and Christmas breaks in their college. And then during COVID, actually something interesting happened, was that because all the colleges were going online, we found a lot of students who were studying in the likes of NUIG or DCU or DKIT. They were living back in Meath or Cavan, and they weren't living in Dublin because their colleges were all going online. So they were available on Fridays, and we got a number of people coming in on Fridays in their final year in college. So they actually got to taste what it's like to work with us, and we got to see what they're like. Like one lady in particular, she's finished in GMIT actually, and she was in with us every Friday for the last 12 months, and she's starting actually on Monday, first year trainee chartered accountant. So, and she's coming in actually, and she knows her systems now, and that's worked out pretty well. Because you get to see what people are like, and because it's a big jump starting a new career straight out of college, and you know it's nerve-wracking for people, and sometimes people don't get it right, so it's nice to have that gentle break into the system really, and it gives people an opportunity to see if they like it or not. And we found out that if people are applying, try and get them in even for a bit of work experience initially, to see how they settle in the environment, and if they're suited to the profession, and hopefully they are, and if they're a good fit, they'll start.
Absolutely. So it's important to be developing those relationships early. And I think this just applies to ROI at the moment. If you have a relationship at all or connection at all with the local schools, we've got a boot camp product which just makes accountancy fun, which can be your link into the schools, and maybe get a few transition year students to visit you and so forth coming out of that. So we certainly encourage people to that. Catherine, you're involved in the accounting technicians, and thank you very much for your involvement in that. But that's also it's good to do it. It's a good intro to it's a good source of staff at that level for you.
Yeah, and the really good caliber of staff as well, because you've got the kids who are leaving school thinking about their future at that point. So they're they've put thought and time into making the decision as to whether they're going to go to the college route or whether they're going to go straight into work. And so they're thinking about university fees. They're thinking about what way that they learn. So do they learn better whenever they're on the job and receiving the training, and then applying what they're learning through the accounting technicians course in their day-to-day work. So you're getting those people who are really thinking about their future, and they're the kind of staff that you want, you know, those people who are very proactive. So I've always felt and really passionate about that accounting technicians route, that where you get those staff in, they really learn from the basics up. So they understand, you know, even payroll calculations, it's still all taught manual. So whenever somebody's on the phone to you and you're maybe a manager in your role and they're saying about net to gross, and you can work these things out, you know, in a bit of paper, that those skills that stay with you for that rest of the way through. So I think that's a really good route that people need to make sure that they recognize the quality of those trainees.
Yeah, I'd wholeheartely agree with that, Catherine. I mean, like, we've had super experience with technicians who've come in. Actually, we've taken in 2 this year, 2 last year, 2 this year, and it worked out brilliantly. 4 days in the office, 1 day in college, and because college is not for everyone to go straight into college for 3 years, 4 years after school. And some of these guys are fantastic, and it's because of the link between the accounting technician and chartered accountants. It dovetails very well with our training programs, and it's a superb route. And I think it's brilliant as well that Solace has partnered with Accounting Technicians Ireland to sponsor that program. And so we've had really positive engagement with Solace, with accounting technicians, and with the students we've taken on the last couple of years. So I definitely recommend firms looking at that route if they haven't done so already, because it's a really superb route.
That's really helpful. It's great to hear all of those things. Hopefully there's something there for everyone to pick up something from in terms of what you're doing. I think it's very important that, you know, I mean, obviously everybody wants to do the best for their firm, in making firms just more attractive for graduates, for school leavers, for qualified people. It raises all the boats, I think. It just raises the profile of the profession. So I'd like to thank you both sincerely for sharing with us and for coming on and for your time and for your insights. And I wish you all the very, very best with recruitment this year and beyond, and with the growth of your firm. So thank you very much both. And if you can stay on for a few minutes, I'm sure there'll be some questions that people will have about what you're doing. So if you're more than welcome. So I'll hand back to Jeremy now, who I think is, apologies for running a bit late there. That was just so interesting.
No, it's a great conversation there. Catherine, Connor, some great insights. No matter what size your practice, you shared some great tips there that you can use. And you're right, sometimes the ATI route is something that gets forgotten about, great source of talent, and just all your different initiatives. So thank you. Definitely do stay on. We are going to go on a little bit over, but not to worry, as I say to you. Do stick with us, and it's great. Now, I know, Conal, you're going to get the slides back up as well. You mentioned the boot camp, and we have a link to the boot camp for second level students. And also, this is very timely, and you'll remember that I had our colleague Sinead Fox-Hamilton and also Adrian Markey from Warrenpoint in County Down back on in June. And we were talking about the student recruitment deadline, which was starting at that stage in June. It's been going throughout the summer. I'm sure some of you have heard Sinead on the radio at times. It's been online with social media, different things, online open days, and even in-person open days as well. And it's going quite well so far. But now we are really coming to the crunch time, just a week to go to enrollment. So we'd say to practitioners and anybody on here today, if you know of somebody who is considering a career in accountancy, or you're a practice yourself and you actually have somebody in to get to register them and so on, this is the time to be looking at it. Also,
am I sharing my screen, Jeremy? Sorry.
You are indeed, Conal. You're sharing the screen, so it's great. We have all the links there as well. We'd just like to remind you as well for practices, and training is a great source of obviously your accountants of the future and so on. If you haven't been training, and some practices haven't in recent years for different reasons, and you want to even have one trainee last year, but you want to have two this year, there is an incentive scheme there where you get €1,000, £900 sterling off the next level fee for the extra incremental. That's up to 4 students, so quite a good saving there in your first year. If you want to learn more about the steps in, if you're a potential trainee accountant, you can get it there on that bottom link to the website, or as a practice as well, how to register, when to register, but don't forget the 12 September deadline. That's as much as I'm going to say on that one. And Conal, if you can click the slides ahead, I'm delighted. That's the bootcamp linked as well. I know you mentioned it briefly. Guys, take a look at that slide as well. The next,
yeah, we'll move on then.
We will indeed. And listen, a little bit later than we planned, but all good stuff because we've had such a packed show. I'm delighted to be joined this morning by our Director of Professional Standards, Aidan. Aidan, can you hear and see us, or have we lost you?
I can hear you and I can see you. I'm not sure I recognise the picture that you have up on the screen.
I'm sure you've been like me, Aidan, taking notes there, and some very good tips from both on the tax side from Garrod and also from Catherine and from Connor there. Listen, Aidan, I know you've been in your role about 6 or 7 years and worked in the Institute over the years. And some of the things I'm going to start with here in our chat this morning for the next 20 minutes or so. I'm going to start actually with our initial chat there on audit. We outlined there with relation to a couple of things for Republic of Ireland auditors, compliance IASA, a couple of changes there. The alternate requirements for sole practitioners coming into enforcement from April of 23, but also then the actual CPD requirement, which is something people should be working on already. Listen, is there any, I suppose, thoughts you can share from the regulatory point of view, from professional standards, but any tips as well on those 2 points to kick off?
Well, I mean, just to say at the outset, Jeremy, you know, we don't waken up every morning and think about what we can do to make life more difficult for practitioners. So, you know, what tends to happen is our regulatory requirements reflect the expectations of our oversight bodies, of the state agencies responsible for regulation of the profession, whether it's in audit, FRC and IASA, or whether it's in AML areas. And so, you know, what firms and members are hearing from us, or why we're introducing new requirements, etc., tends to flow from legislative requirements or new regulatory requirements that are being, I wouldn't say forced on us, but are emerging as a result of changing trends, changing expectations, etc. So two of them you've already mentioned this morning, the new requirement in respect of an alternate for sole practitioner auditors in particular. That requirement is already there if you're holding client money. So there is a requirement in our client money regulations to have an alternate. And this latest requirement is, as you've said, coming at the behest of IASA. And so in that regard, it's reflected only in the Irish audit regulations at the moment. But I should say that the UK regs are due for an update over the next couple of months. I expect this will be in there as well. So the FRC have already been flagging an expectation to us in that regard. So we will see a similar amendment. And of course, there are two sets of audit regulations now, following on from Brexit. So any of you who have audit registration in both jurisdictions just need to be aware of that. Now, the whole purpose behind the alternate is not really to provide a home for your audit clients. If you fall under a bus or some other catastrophe happens to the practice, it's really to provide a port of call for the audit client to provide or to obtain some advice, some guidance as to where they might need to go to get a new auditor, or in terms of any outstanding issues that there might be in respect of, I don't know, CRO filings or whatever. There is not an expectation there that the alternate steps into the shoes of the sole practice involved and assumes all of the issues, all of the responsibilities that would have rested with that firm in the first place. So it is really to provide someone to go talk to. And I think it came up in the Q&A chat earlier this morning. Maybe there is a need for yourselves and ourselves to sit down and just say, look, what might that kind of agreement look like? And we have time to do that because it doesn't come into force until spring of next year. So I think we do need to do that, and we can add that to our to-do list. The other one, again, the CPD regs that you have flagged, and I suppose it again reflects the increase in intensity of supervision that the profession is being subjected to. And you're right, while this applies, these guidelines are IASA guidelines, and so applicable primarily in the Republic of Ireland. It's all underpinned by the same legislation in Ireland and the UK. Okay, the UK has left the EU, but its audit regulatory legislation and the arrangements under which we act as a supervisory body in the UK are essentially the same. And CPD, auditor CPD monitoring, if you like, the underlying requirement for an auditor to do CPD is almost identical between the two jurisdictions, and indeed in the two sets of audit regulations. Although we have amended the Irish audit regulations to provide some more granular information and requirements in terms of the IASA approach. So, as you have said, they are in effect from the 1st of January this year. We will begin actively monitoring compliance with those regulations from early next year, from January next year. So firms should be, well on course to be able to demonstrate compliance with them, at this stage. And we have been busy producing lots of aids, lots of support, lots of checklists, lots of performance in terms of including examples as to how a CPD plan might be prepared, might be subsequently evaluated, and indeed, my colleague Cathy O'Hanlon, who some of you may know, who's an inspector with the team, has put an awful lot of work into developing those aids, and indeed there is a webinar on Professional Standards website, whereby Kathy takes people through those new CPD requirements. We've also addressed them in previous regulatory bulletins this year, and indeed today we are writing to all of our audit compliance principals in all of our audit firms, reminding them of the obligations and indeed signposting them to where the information I've just mentioned can be located. So in terms of what to watch for next year, if you are up for a visit, this is an area that we will be focusing on. It's an area I expect closing meeting notes and firm reports, actually, to be honest, to contain quite a lot of to-dos, because I understand that it's very difficult for practitioners to comply with an ever-increasing regulatory burden, particularly in the audit space. And typically what we find is that firms don't start to pay attention to these new requirements until they absolutely have to. On the other hand, CPD has always been there. There's been IAS 8 our communications with firms down through the years, particularly where people are being admitted as RIs, refer to IAS 8 and the requirements to continue to comply with IAS 8, which is essentially what these new CPD requirements are reflecting. It's what's there, it's what should have been there as best practice already. So it's imposing a little bit of formality on that. And as you've said earlier as well, if you're on the Irish Audit Register, no matter where you are located, well, then these apply to you. And to pick up a question that also was in the Q&A earlier, yes, they only apply to responsible individuals. So they only apply to people who are registered to conduct statutory audits. Now, obviously, we have a monitoring obligation with regard to CPD in the UK as well. And to be quite honest, FRC have also looked at what IASA has done. It has looked at what we are proposing to do in terms of how we are dealing with compliance monitoring, and have said to us, this is fine for us. So we will be rolling out more or less the similar approach to how we are dealing with CPD monitoring in a UK context as well. So firms just to be aware of that. And as I say, FRC more than happy for us to be dealing with their requirements in that way. So those are the two issues really in terms of recent changes to the audit regulations.
We have a link previously in the slides we referred to Kathy's video there, which is really very good. It's about 20 minutes, but it goes into all the details, tells you what all those extra resources, where to find them on the professional standards section of the Institute website. And also, as Conal mentioned, if you are interested, supply your email address in that link we had earlier in the actual PDF version of our slides, and we will send on information of the courses that you can do potentially, and the other guidance is there as well to help you to become CPD compliant as we get into this fourth quarter of the year, to catch up on your 2022, because you said, it is going to be from January 23 more of a focus on this in reviews. Another area that we mentioned earlier, and Conor mentioned it as well there, a lot of work ahead in the coming months, is ISQM compliance. Obviously a new requirement set out towards the end of last year. I know I'm talking to a lot of practitioners, it's on their to-do list, but they haven't quite got there yet. And Conal shared earlier of the guidance and webinars and help that we're going to be sharing from Practice Consulting Viewpoint over the coming weeks to help everyone get compliance. Listen, again, what are your thoughts, I suppose, from a professional standards viewpoint on this, and what will be, and it's difficult, I know, for you to look ahead, what would be your approach from a regulatory viewpoint as we get beyond the deadline of 15 December and into 2023, and your expectations, what firms should, and the level of work they should have done?
Well, there's no doubt it's a game changer. It certainly takes things on to another level from what was dealt with primarily in the ISQCs. And again, it's another one of those areas that firms really only start paying attention to when they absolutely have to, or when people like us come knocking on their doors to carry out an audit review of that firm. Look, as with ISQC 1 and the related standards, we recognise that it's a sea change for firms, particularly at the smaller end. I hope we will recognise that these changes will take time to come to terms with. We would not be expecting 100% compliance from day one, or indeed from day 365, to be quite honest. It's a journey, and it will be a journey. What we would like to see is certainly firms being aware of the new standards, and certainly starting to, what steps have they taken to date to get to grips with implementation. Whether that is talking to you guys, and I would absolutely recommend any firm out there, all firms need to be thinking about this, and I hope you guys are very busy over the next 6 to 12 months, because from what I've seen in terms of the tools that you have developed and how you're approaching implementation, that will tick the box for us, to be quite honest. If firms are in a position to to demonstrate to us that, look, we've Conal and Jeremy are talking to them already, or we've looked at Michael McAllister's PQAs, which I understand are being updated for the ISQM requirements as well. That all helps. That's the route that firms should be going down at this stage. And as I've said, when we are in, we will be asking, what have you been doing here? And again, I would expect closing meeting notes and visit reports again to be flagging, look, there is more needs to be done here, and possibly can you provide us with your implementation plan in terms of how you are going to get there. So it's it's now the 1st of September. These new standards have been on the starting blocks for quite some time now. Absolutely accept that firms are extremely busy and have to deal with a lot at the moment, but now's the time, if you haven't been thinking about this already, to start to get on with it. I think I've seen a reference in your slides to this as well, Jeremy. Even IASA, are in the you're in the practice webinar business now. IASA is now in the YouTube video business, and it has its own YouTube channel. So I think you have a link there to a couple of very short.
Indeed. There's 2 excellent short videos. You're right, IASA have got into the video game in the last while. Very short videos, 4 minutes each, setting out ISQM, and then they get into more detail. I think it's the start of a series. There's 2 so far. But I'd say to anybody, if you use YouTube or whatever, follow the Institute on YouTube, and you even get recordings of practice news and other webinars that are free. But also follow IASA, because they are putting out more and more social media content, and very useful, as you said, to if you're totally a newbie to this and wanting to learn what's it all about. In 4 minutes, gives a good description.
Yeah, absolutely. And I've had a look at obviously your slides contain details of upcoming CPD courses, and there is an excellent amount of courses dealing with this area and dealing with the the other areas that you've spoken about or will speak about later. And bear in mind, those courses do count towards meeting your IASA CPD guideline requirements. So a lot of that ISQM work that hopefully you will all be doing from here on in. Well, that I would like to think that would have been part of your planning at the beginning of this year. So let's see some implementation of that planning during the rest of the year.
That's as much as we're going to say in ISQM. If you haven't started on the journey, I've been talking to some practitioners and they haven't in recent weeks. Time to get going. That's your message there, Aidan. Listen,
Yep.
moving on to the next thing that's always, I know, of keen interest to everybody when we have professional standards on, and I know you've been on previous webinars, is monitoring visits. And obviously, there's been a big about change in the last couple of years, everything moving online, and they're still online and done on a remote basis. Couple of things here, and I know there's so many issues, but in general, if you'd like to highlight a couple that are coming from audit, insolvency, AML visits that you're doing, and also as well, it'd be interesting to hear, as we are now back into a new normality, what are your plans with relation to keeping visits all online, maybe going back to some in person again? We'd love to hear that.
Okay, well, you're right, Jeremy. For the last 2.5 years, visits have been carried out remotely, and that's visits from the big four right down to the smallest of our member firms, and I think by and large they have worked very well. I mean, I'm interested in feedback from firms as to who have had such visits, as to how they have reacted to them, how they have received them. We certainly would like to preserve the advantages of those of this new approach. It certainly, we think, reduces the stress on firms from having an inspector camp there for a day or two, and indeed having to cater for the inspector queries going back and forward, and to be there on call for the duration of that time. It is an imposition. Absolutely accept on a firm's time, particularly in a smaller firm. So we would like to preserve the kind of advantages that we've seen emerging from remote visits. And what we are currently doing is working on a kind of a policy, an internal policy, in terms of when visits could be continue to be carried out on a completely remote basis, or on the other hand, when it's more appropriate to maybe adopt a hybrid approach, where you might have an opening meeting carried out on a face-to-face basis, or indeed a closing meeting. Certainly file reviews where we can do them off-site. We'd probably like to continue to do them off-site. We've put in place some technology within the Institute that allows sharing of information confidentially and securely over the cloud. That kind of facilitates that. But on the other hand, we have had occasion where we have gone and collected files, or we've used other secure ways of getting files back and forward between firms and reviewers. So look, how a visit will take place in the future will really be determined by the risk posed by that firm. If the firm is assessed as low risk, very few audits on no regulated audit clients, maybe just one RI, chances are that, and a good visit history, chances are that could continue to be done remotely. Where a risk assessment of a firm, because it maybe has a fair degree of regulated type clients, credit unions, insurance entities, or changes coming through from the firm annual return, maybe a significant increase in the firm, or an increase in terms of RIs or audit portfolio, that might prompt a visit to be carried out maybe on a full face-to-face basis. Or on the other hand, we might do it, again, opening meeting or closing meeting face-to-face. I'd like to think that, unfortunately, from time to time, there is bad news coming out of a visit. That where that is the case, we probably seek to do that on a face-to-face basis, and I think that's only fair on the practitioner, the firm that we would do it that way. So look, we are starting to get back out on the road, but keen to keep disruption to a minimum, and we will just see how that evolves over the next coming months. And look, it's an approach we have discussed with FRC and with IASA in particular. Their reviews of us have been carried out remotely to date. But I have three. If the firms out there think they have it bad from inspections from ourselves on a 6-year cycle, max. I have 3 inspections taking place between now and the end of this year, one from FRC, one from IASA, and one from the UK anti-money laundering regulator. So we get the boot stuck into us as well on a more frequent basis. And I'm not saying we stick the boot into you guys, by the way. And as I say, those visits are being carried out primarily remotely, but we are seeing them, saying to us, well, look, next year we'll be back on site.
That's good. It's good to hear, and you're right. I do definitely think for bigger firms or for maybe more paper-based files, you're right, where there's actually going to be delicate issues to talk about. The in-person is very hard to replace, and so on in that regard. Time is not on our side, but is there any particular issues from the monitoring visits, even 1 or 2 things that have sprung to mind, and you say, guys, watch out for that?
Yeah, we'll come to that. I'll come to that now. And look, from time to time, we produce pieces in our own regulatory bulletin or Whether Practice Matters on common issues, common themes emerging for visits, and we will do one of those, I think, again in the near future. And before I forget about this one, and Conal and I have dealt with a number of queries in this in recent times, is long association with audit clients and expectations in that regard. And there seems to be kind of a war story maybe going around out there that we have an expectation within professional standards that where that kind of set of circumstances takes place, that where you've been acting for an audit client for a considerable length of time, that the file needs to be subject to a hot file review before it's signed off. We don't expect that. And nor does it say that in the ethical requirements for auditors. Yes, it is a risk, and as with all risks need to be managed. They need to be mitigated. So we're looking for the firm to be able to demonstrate that it has recognized the risk and what safeguards the firm is putting in place in mitigation, whether that file is reviewed as part of the audit compliance review, whether it's subject to a cold file review, not necessarily externally, maybe every 2nd year, maybe every 3rd year, or where it's possible within the practice that it is reviewed by a second partner, as part of the cold file exercise. The key is to document that you've recognized the risk and what safeguards you put, and they need to be effective safeguards at the end of the day by way of mitigation. But that doesn't automatically mean a hot file review. If a firm wants to do that, that's absolutely fine.
Thanks very much, Aidan. That's come up a lot, that one.
Yeah.
But it's good to get clarification on it, because people, it's certainly the word has gone around on that particular, and these things are pro legs, but it doesn't. It doesn't say that.
Yeah. So look on other issues, Jeremy, as you've mentioned, and these are recurring themes that come up time and time again. And I suppose with COVID, going concern has been a particular issue, particularly with clients in the hospitality sector in particular. Even before COVID, it was always a key area. So we have seen some very good examples of auditors dealing with the going concern issue, where there's maybe been sensitivity analysis produced as part of their work and assessing forecasts, and a lot of good documentation around that. In other cases, yes, that work has been carried out as well, but not being documented sufficiently. Nor might the lack of evidence of challenge to management assumptions. So back to what the oversight bodies talk about, skepticism and the application of professional judgment. Firms giving themselves credit for the work that they're doing in that particular area. And similarly, in financial statement disclosures, seeing a lot of good disclosures there around the COVID uncertainties, but in other cases, some very brief disclosures. Even when directors have considered that there is no impact on the entity arising from COVID, accepting that we've not moved beyond that, I suppose, to some extent. There does need to be some disclosure in the financial statements just to enable the reader to appreciate the issues that might have arisen. Fraud is something arising from COVID. Again, state aid, whether there are any issues around state aids received by companies there that might potentially give rise to fraud issues. So again, recognition of that and documentation of what you've done. And of course, subsequent events. Subsequent events is always an issue. But what has COVID meant? Well, COVID has meant that there might be much more of a delay in terms of getting audits completed and getting financial statements signed by directors. So just remember that subsequent event procedures need to take place up to the date of your signature, which typically will be after financial statements have been approved by the directors. I mean, you mentioned, Jeremy, as well, I'm conscious of the time, anti-money laundering. I mean, and insolvency, firms will have seen us up our game a lot in terms of anti-money laundering activity, and that's kind of being driven, I suppose, by a greater interest by governments globally in the prevention of financial crime, financing of terrorism, and obviously operating in Ireland and in the UK. We're seeing interest, an uptick in activity from government and related state agencies in both jurisdictions there as well. New legislation coming through in the prevention of crime legislation in the UK, and as you mentioned earlier, Jeremy, via the European directives. And I would, point attendees today to the documentation and the material you have mentioned earlier. We feed into that from professional standards in terms of, we would participate in a lot of groupings and, regulatory committees outside of the Institute where we are hearing directly from HM Treasury or UPBAS in the UK, or indeed the Departments of Finance in the Republic of Ireland, and so are able to feed in to colleagues elsewhere in the Institute about what is going on, what trends are coming through from those meetings. Trust and company service providers is one, and you will have seen, hopefully, certainly in the UK context, us pay a lot of attention to TCSP activity in firms, and most firms do a little bit of it and don't realize that they are doing it, and it might simply be acting as filing agents, but it falls to be defined as a TCSP activity. And we're interested in that because national risk assessments are in both jurisdictions are suggesting that this is a way, trusts, non-resident companies, whatever, are a way of laundering proceeds of crime. And so we're seeing our regulators saying to us, well, what are you doing in terms of the firms that you supervise? Or, how do you know what they're up to? Are you risk assessing firms to, pay particular attention to firms that are carrying out these high risk type activities? Because the TCSP, whether we like it or not, is regarded as a high risk activity. But I would have thought for the most of our constituents, it's not. But just in the generality of AML supervision across the AML supervised sector, it certainly is. You mentioned as well sanctions regimes. That's something that we're being kept busy with as well, both from HM Treasury in the UK and the Central Bank and the Department of Finance here. And you will be aware that there are now statutory prohibitions on the provision of accountancy services. to certain entities that have links with Russia. And again, you need to watch our hub for that, because that has the latest information. And this is real. We do have firms that have discovered, and not just large firms, right down to smaller regional firms that have discovered that they are acting for clients that have connections with Russia or that are Russian citizens. And we have had to work with them to figure out, well, what does this mean? And the blunt instrument that the state, both states have used is, well, you walk away. You know, there is a statutory prohibition on you acting, and you walk away. And you will have seen some press coverage about the difficulties that is posing for, I suppose, financial services and kind of funds more recently. But, you know, don't think that these don't apply just because you're a small practice region with apparently uncomplicated or local clients. You would be amazed. One other area, Jeremy, just coming down the tracks, and it's relevant for everybody as well, because people say, well, it's not me, that's up there. Climate change. Yeah. You know, there isn't a week goes past that I don't get bothered by the FRC or by IASA. And if any of them are on this webinar today, I don't mean that in any insulting way. But certainly, what are you doing in terms of climate change? And I said, well, what do you mean, what am I doing? Well, what is the Institute doing in terms of alerting its members, its practitioners, its auditors? What are you doing in terms of training for your inspection team, in terms of climate change issues? So those of us who are, well, maybe not me, it was before my time, but there was a time when we had no accounting standards, you know, and then we had SSAP 1, and then we now have IFRS, whatever they're up to now, having gone through weeks of accounting standards. We're now in the bottom rung of the ladder for climate reporting standards, sustainability reporting standards. We're seeing a new standard setter out there now, developing standards for reporting on these issues. We're seeing a directive now, the CSRD directive in place in the UK, in the EU, which will have to be implemented here within the next couple of years. And while there is initially an application only to larger clients or larger entities in terms of their reporting, climate change risks trickle right down. You know, they will impact how an entity's performance, whether it's a small company in the agricultural sector. Didn't we see lots of coverage in the last couple of weeks about emission targets in the agricultural sector? What is that imposing on those smaller limited companies operating in the agricultural sector? Risks from floods, risks that you know, we're seeing from drought. All of these have potential to impact the very smallest of companies. And so what are we doing there? What's going on in the current, you know, look at the current inflation crisis, just moving on from climate back to going concern. How many reports are we seeing now in the media on a daily basis with small companies saying, you know what, we're not sure that we can continue. So were you factoring that in to your risk assessment and your going concern assessments now in respect to those types of clients? And they're across the board. So, you know, it's, you know, we're 1st of September now, 2nd of September. Year ends typically will be coming up towards the end of this year. I suspect there will be a lot of going concern issues to be considered for year ends 2022. And so, you know, firms need to be very tuned in to those kinds of issues as we go on. I mean, I started with AML training. Jeremy, you mentioned there already on your slides, again, upcoming courses, and indeed
Indeed, Conal, we have, and I think you're joining us, we have 2 courses coming up, one for Northern Ireland and one for the Republic of Ireland, half-day courses in October and November. And I'll be talking a little bit about those as we go on, and they'll be part of your wider training, of course, as well for your expectations.
Yeah, and look, it's all about training. It's all about having the processes, procedures in place, demonstrating an awareness of the requirements. Make sure you're registered on the Go AML.
Yeah.
Under-reporting is something we could hit with all of the time. Why aren't accountancy firms reporting more? Well, look, to be honest, I push back and say because they don't see very much actually, or they're not taking on clients that they're not comfortable taking on. But you need to be able to demonstrate that there is an awareness there, and whether you feel you're going to be stuck with a reporting obligation or not, get registered with Go AML, certainly in an ROI context. I'll touch very briefly on insolvency because I know we're nearly up with time. Look, the issues that we come across carrying out insolvency reviews, approval of remuneration, and statement of insolvency practice 9B is there. So that continues to be an area where issues are routinely identified during monitoring visits. So look at SIP 9B in respect of what you need to do in terms of getting your remuneration approved, because it is something we come up against time and time again. Annual meetings of members and creditors not held in liquidations. It is a legislative requirement, and it is important to ensure that members and creditors are aware of the actions that you as a liquidator are taking. And you're reporting on progress of the liquidation, et cetera, et cetera. CRO, filings, again, often late, often incomplete. Although having said that, we are seeing an improvement there in recent years as well. And case progression. There are a lot of reviews that we're carrying out where, Derek Wilson, who does these for us, would say to us, look, there are so many cases out there which could be closed and open, and the practitioner just isn't getting to get them finalized. And it is something that we will raise on a visit, get those cases closed. It's more often than not, it simply requires the insolvency practitioner making the time to get it done and get the final meetings concluded and get the filings done. Just a couple of observations there on the insolvency piece. Bit of a whistle-stop tour, Jeremy, and
well, it was a very comprehensive tour, Aidan, and that's actually what I find our members want. We covered everything there, as I say, from audit, financial reporting, insolvency, and even a look ahead, and that's great as well. Because climate change, and I know we had our colleague Susan Wozni on earlier in the year in Practice News. It's for everybody. It's going to impact everybody, and I'm not surprised that I asked FRC or asking you. And for no matter the size of companies, as you said, there's impacts, be it supply chain, be it potentially building on a floodplain, agricultural related. Yeah, something for everyone. Aidan, thank you very, very much for that update. I am conscious of time. Conal, I'm not sure, have we had questions coming in? But while you may be looking at that and getting the slides back up, I'm going to go back, and if there was anything that had come, and I know Garrod, I'm going to call on you again if you're there. Is there anything that had come from your questions that had come to you, or anything you'd like to highlight, even in 30 seconds or 1 minute? Maybe there's nothing, but tell us anyway, Garrod.
Yeah, and just quickly, again, to reiterate, a question came in on the exceptional contact facility, and it was just where to find it. So I've shared that link in the chat there, so do check it out. There's 3 email addresses, depending on business, personal, or the capital. And look, once you send in your email, by all accounts, you will get a swift reply. So that link is there, and look, we'll share it again on Tax News this Monday. So if you're not signed up to Chartered Accountants Tax News, do sign up to it. You'll get a lot of useful information. All Ireland, we cover, all Ireland taxes, so but the UK taxes in there, obviously ROI and international taxes as well. So we will include that there. But as I say, look, I've shared that link in the chat, so do check that one out. There was another query on RTB. Look, I'm not too familiar with RTBs, the downtimes there, but it's not surprising that the phone lines are all of a sudden pretty busy on that one. So look, hopefully that resolves. But yeah, look, as I say, if there is specific issues with RTB, you can let us know, but we wouldn't typically be liaising with them. But again, look, we can look at it if that situation doesn't resolve. But as I say, look, on the exceptional contacts facility, do check out the links, and don't be afraid to use that sooner than later if you are encountering difficulties with my inquiries.
Oh, thanks for that. As I say to you, tax news on a Monday, it's invaluable. They're the two things I always watch out for. E-news on a Friday, going out in about an hour's time, and tax news on a Monday, must have for any practitioner, north or south or even further afield as well. Conal, back to you.
Just a comment there on the discussion that we had with Catherine and Conor. Very interesting discussion, thanks. Just wondering where both Catherine and Conor would see the potential growth areas for small practice in coming years, as in which service lines, thanks. I don't know if Catherine, I know we're over time, if either of you, Catherine, you're still here. You are indeed. What do you think, Catherine? Very briefly, any thoughts there on where we're going? Growth areas.
Growth areas would be management information. So alongside providing the accounts, providing that bit of MI to your clients about what those accounts mean for them. That's more up to date. So I think that's where the focus has to be.
Absolutely. And Conor, any thoughts? Would you agree with Catherine?
Yeah, I would, Conal. I think Aidan's piece is very interesting. I think with regulation, I think it's going to be harder and harder for firms to cover all bases. So I think that firms will have to perhaps go down the route of becoming more specialist so that they can manage risk. And I think that will lead to better growth opportunities for them. So rather than trying to be master of all areas, if they could focus on one area, be it either tax, audit, or accounting, and getting that done right, it will lead to greater growth areas for those specific firms. So I think it's really understanding your own skill set in-house and then focusing in on that to manage the risk around that. And if you do that, I think the growth will follow.
Two very, very useful insights. Thank you very, very much. And thank you both for coming on. I know we've gone over time and you've stayed with us. So thank you very much for all of that. I think we have to move towards wrap up now, Jeremy. I think we'll just wrap up now and then give the Northern Ireland tax update.
Yes, but the Northern Ireland tax update on the slides there, you'll see actually Leontia, we've given her a break this week. She's away on holidays, but she's coming back for our October update. Not too much happening over the summer, but we do have our tax news I mentioned on Monday in the slides there. There has been some clarity with relation to potential penalties. I know a lot of practitioners, I was talking to one or two yesterday, who were busy up until the deadline yesterday for the actual registration of non-taxable trusts here in the UK, and a lot of updates there. Looking ahead, Conal, just towards the end of those slides, we have a lot of different courses coming up. And so basically we have webinars coming up starting next week on financial reporting. And then we have our going into practice day as well on the 30th of September. So if you're recently a new practitioner, got your practice or thinking about your next career move, definitely join us. It's a great day. We have to cover some of the regulation, but also Eamon Leahy is sharing his story and his success as a practitioner over the last 35 years. The attendees are always enthralled, and we a little bit about professional indemnity insurance as well. Definitely an area not to fall foul of. So basically, do check that out if you're in a situation or thinking about your next career move on the 30th of September online, a full day. We have some other events coming up as well there, such as our accounting and auditing for charities here in Northern Ireland. Delighted to be joined by Rossa Keown from the CCNI. So really looking forward to that. I was just actually talking to our former man of practice consulting, Neil Fitzgerald, now head of governance and ethics. And Neil is coordinating a day on Thursday, the 29th of September. It's an in-person event with a lot of prominent speakers in CA House in Dublin on governance and leadership. So if you're yearning to get back and do a bit of networking and learn about what's the latest happenings in governance and leadership, do check that one out as well. Gordon, we mentioned ISQM and our planned webinar. That's the link there on the 5th of October. And as I'm here in Northern Ireland as well, we actually are planning a practice day where we are going to look at practice growth as well as some of the technical topics, an in-person event in the Titanic Hotel on the 21st of October. We'll be putting out more details on that over the coming weeks, but definitely I think I must attend if you can and just even get back in person again. So I'm really looking forward to that one, Conal.
Absolutely. Really looking forward to that. Now, I think we should probably, what we'll do now, if we can, is to wrap up now for anybody from ROI. Just to say thanks very, very much to everyone. I think, Aidan, we'll release you, and thank you very, very much for that. It was really helpful to hear all of that, all of what you're finding, what's important to our members, and what's coming up. Say thank you to the whole team behind us who helped us put this together. People who in CPD, the people, Chris, who's there, our AV guy. Apologies, Chris, we've run over again on you, and yourself, Jeremy, for.
Indeed, and I'd like to thank as well our Bernie and actually our communications team as well. Aisling was very helpful to us yesterday to say as well, so call out for you, Aisling. And also here in Belfast, just to thank Zara for having me here at the office, our head of Northern Ireland, Zara Duffy, and Bernadette Rowan as well in our administration facilities team, just to help me set up here and so on. It's been great. Great
stuff, and thanks to Connor and Catherine. And I'd also like to say congratulations to Fiona Hickey. I don't know if she's on today, but anyway, congratulations to her, who won the best practice, the overall best practice award in the Irish Accountancy Awards last night in Burlington. So there, I think that's and to our sponsor, of course, AccuVest. We're always delighted to have you. Now, okay, that's where we're at. I think
that's us, Conal. And the good news is, for practice news, we're going back in just 5 weeks on the 7th of October. So we'll have a lot more again with budgets and so on in the Republic of Ireland since then. A lot of change in the UK as well, with the new Prime Minister on the way early next week. So looking forward to that.
Very good. Okay. So Jeremy, back to yourself just to run the between yourself and Chris, just to run the Northern Ireland tax update.
Yeah, there is no Northern Ireland tax update, so that's the one up there. We haven't recorded video this time. We've given Leon the week off. She's going to be back in October, so but we have the links there in the slides to actually all the tax news and so on. So
okay, I missed it. Thank you very much. That's great. Well then, that's it. We're done.
Thanks for sticking with us, who's made it this far. And listen, we will be putting out the recording again. So there's a lot to take in today. I was even taking notes here. So we'll have the recording available for you on YouTube very shortly, hopefully by Monday or so. So thanks everyone for taking part. Thanks to Connor, to Aidan, to Catherine, and to Garrod as well, of course. Well done in your debut, Garrod.
Sure,
see you now, guys.